Acura's all-new ADX, a compact SUV that isn't just built for one thing. It's precision crafted for everything. To escape the grind with available all-wheel drive. To go with your flow with available Google built-in.
Hey Google, turn it up.
Okay, turning up the volume. And crafted to be heard with an available Bang & Olufsen premium sound system. The all-new Acura ADX, crafted to match your energy. Acura, precision crafted performance.
Take your vibes and go, 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 go.
Google is a trademark of Google LLC.
Reality radio for a really great future. We're talking real money.
Welcome to the show about your dough. Tom Cock here. Don McDonald with another week off as he rummages through New Zealand in some sort of RV. I mean, if you see him, remind him to stay on the wrong side of the road. He'll be back here in just a couple of weeks. You're out there trying to figure out how to make sense of your money and maybe more questions now that your taxes are done, some of you. And we're here to answer those questions for you. Let me give you the telephone number. It is easy, 855-935-TALK. That's 855-935-8255. Taking your calls for an hour today here, then we'll be off for an hour and then on KVI from 2 to 3. So if you're tuning in for football, you're still a little early. Well, I don't ever wake up any day and plan on being a jerk. It's just not. It's not in my DNA. Okay, sometimes I am. I get it, but I don't wake up. Now it turns out last week, I guess I kind of was, and through social media, I got called a few names. These are names I can't say on the air because it's not the Howard Stern show, but it was surprising to me because I was criticizing somebody in our industry and I got beat about the head and shoulders for doing it by him. Let me give you a little background. It turns out that on a popular social media site, I'm not a Facebook user. I am on LinkedIn. You could find me there. There's not very many Tom Cox on LinkedIn. So I'm on LinkedIn and I'm reading the post, and a post from a person in our industry who's considerably younger, somebody that I know through a family connection, has a post about how he's going to go teach high school students, which I think is fantastic because I wish we spent more time with young people helping them about money. The second part was he was going to be providing a contest, a stock picking contest. Now, I absolutely hate stock picking contests, especially for young people. Abhor them. And I wrote on publicly that thank you for going and working with young people, but please don't tell them that picking stocks is investing. Because it's not. It's gambling. It's praying. And I'll give you a couple of numbers here in a minute that I think really bear that out. But anyway, he back-channeled and called me a name and said I was blocked. He then wrote to the human resources person in our company and called me another name. So why am I so strident about what's wrong with just and I think he even posted later in response to mine that no children were harmed in the contest. Why am I so down on stock picking contests? Well, let me tell you. Because the average person I talk to is 55 years old. The average person I talk to has not made money the focus of their life. They haven't studied how markets work. They haven't followed great money managers. They were introduced, many of them, to investing by a stock picking contest in high school. Oh, yeah, I remember that. The teacher said, for the next 2 months, you pick the stocks you think will do best. Do you think that's investing? No, that is not investing. Investing in stocks, individual stocks, is a pure gamble. Part two of this is that people then think investing is a zero-sum game. Bill Gates gets rich and I don't, right? Wrong. We'll talk about that more in the show. You don't have to beat anyone to profit from investing in stock markets. But here's the reason I really hate it. It sets you up for long-term failure. Because you think you have to go pick the best companies or the best markets or time the market or do something that requires study and activity to be a successful investor, to retire. And that is completely wrong. If you don't believe me, you can type this name in on the internet and you'll read his study. It's Bessembinder. Oh, you got to believe the Germans, right? Bessembinder. He went back to 1926 and looked at the behavior of stocks for 90 years to see, well, how do you pick stocks or how do you be in markets? And what he found was, this is fascinating. The best 4% of listed companies from 1926 explain the net gain of the entire U.S. stock market since 1926. The rest of them don't do as well as T-bills, as very short-term U.S. government securities that don't pay you very much. Do you think you can pick that 4%? When we know the evidence is, and we'll talk about this on the program today, that there isn't a manager who's done that for a long period of time. We'll even talk about Warren Buffett today. So I don't like the idea that we teach you that you need to pick stocks, that you've got to decide that Amazon is the best for the next 20 years, even though it's been the best for the last 20 years, or that Apple will now continue to outperform Microsoft, which has had a great run here over the last couple of years. That is not investing, that is gambling. Investing is a long-term exposure of your assets to certain markets. That's investing. So, sorry to be a jerk this week, but I'll try to do better the rest of the show. We have a special guest, so join us for that. And your calls, 855-935-TALK, 855-935-8255. We'll be right back with more on Talking Real Money.
Tom and Don are talking real money.
All right, let's get this break out of the way really quickly. If you're looking for an investment advisor, you need a fee-only, 100% fiduciary, low-cost, science-based advisor. And that describes Vestory. If you'd like to learn more about us, it's really easy. Go to Vestory.com, Vestory.com, or give us a call at 800-386-3004, 800-386-3004. There, that wasn't so bad.
For your real life and real future, Tom and Don are talking real money.
Welcome back to Talking Real Money. Our telephone number, 855-935-TALK, 855-935-8255. Here to answer your questions every week. I had a question last week that came in about Social Security right at the end of the program, and I'm ashamed to admit that I had the answer wrong. It was about filing for Social Security and then trying to get your own filing on your spouse and getting your own benefit later. It's called deeming. I said you couldn't do it anymore. It turns out with a survivor benefit, you can. I had that wrong, and I got to apologize. I wish I knew how to get a hold of the woman who called, and I'm really sorry. So I told her to go back to Social Security, so hopefully they'll set her straight. So we're here to do the best we can answering your questions. I am just absolutely thrilled this week that we have a guest who's been, a mentor, a friend, business partner for many years. You're going to know the name because he's been a financial educator, advisor, author, podcaster. Sorry to say his podcast still does as well as ours does. You've heard him. You've seen him. He's, I think, helped, 100,000. He'll tell us. My great pleasure to welcome to Talking Real Money, Paul Merriman. Paul, thank you for taking the boat over here and joining us on the show.
I'm thrilled to be here. I woke up this morning, Tom, and at first I forgot that I was going to be on the air. And I was
Me too, by the way.
I was not feeling real peppy. But then I remembered, boy, I was up and at 'em and had to bring something new to this show.
I'm not surprised.
That I've never done before.
All right, we'll talk about that in a minute. So if you have questions for Paul, you know the name. He's been here educating thousands of you in the Seattle area for 30 years. No, because the anniversary of Merriman, your company, is it's
35.
35 years. Wow, that's terrific. Still operating just down the street here in Seattle and doing great work. So the number is 855-935-8255. We'll get to a couple of topics, Paul, but let's go ahead and go to the phones because Jay has been kind enough to stand by and now joins us on Talking Real Money. Hi, Jay.
Hello, good morning. I was listening to you say that stock picking is a gamble.
It is go ahead.
I think that's too broad a statement. There's a point that you may be missing on that, and here it is. I picked some stocks, 10 years ago, and whether you're investing or gambling depends, in my view, on why you picked the stock. I did not pick a stock for growth. I thought it was going to be really good and make all sorts of money on it. I was hunting for stocks that, number one, looked pretty stable in price, whether the market went up or down, and they paid great dividends, and the dividends were consistent. And out of all the stocks that are out there to pick for, I found 3 that met my criteria, and I invested several $1,000s in one of them, and I could not have been happier 10 years later, because they pay consistent dividends, and not just semi-annually, but monthly. I had a monthly income without any worries about losing my money.
Jay, I'm going to let Paul respond first. Go ahead, Paul.
You know, Jay, number one, I agree with your comment that investing in individual securities is not gambling. Gambling, really, within seconds, you can know whether you won or lost. You can double your money. If you win the lottery, you get a really good return on your dollar. But I do believe, when you're talking about individual securities, one at a time, specifically to start with, that it is considered a speculation, and you hit it right on the nose. If you look out 10 years and you have an investment, the probabilities of a profit, don't know how big or small it might be, but a profit is very, very high. But when you look at the returns of individual securities over a period of 10 years, a lot of them do not make any money. And therefore, that's one reason people in the industry consider the mutual fund, broadly diversified, as being a better investment than any individual stock.
You know, and my point really is, and you know this because you've listened to the show, why take the risk of that? In other words, the smartest people in this business, and we can talk about one right now, a guy named Warren Buffett, who is recognized as, the greatest investor of our generation, right? I mean, this is a guy that consistently did better than an index. And by the way, he's told his spouse, when I pass, put it in an index. But he has not, over the long haul, been able to outproduce just owning the type of shares that U.S. large cap value stocks, correct, Paul?
Well, this is what I got up this morning and started to work on.
I'm not surprised.
And because I was curious, because I'm a real value investor. I believe in value investing for a major part of my own portfolio and the portfolio. In fact, I think your portfolios have a lot of value. Here's what I found over the last 15 years. Now, that's not his whole portfolio experience.
Yeah.
Last 15
further.
years,
Yep.
he's had a 10% compound rate of return. That was through yesterday, by the way.
This is Berkshire Hathaway we're talking about.
This is Berkshire Hathaway.
10% is a very good return.
That's a great return.
Yeah.
That was about what the S&P 500 did, by the way. It also compounded at 10%.
Even with the horrible period 2008, 2009.
Yes,
Wow.
exactly. And this is 15 years, so it does pick up that period.
Yep.
But if you invested in a portfolio that is a combination of big and small.
We're talking the market capitalization of companies, big ones and small. Big ones you know, small ones you don't.
U.S.
generally.
and international.
Yep.
And even a slice of emerging market value, the compound rate of return in a diversified portfolio was 11.6.
Wow.
That's a big difference over the long term.
And that doesn't sound like much when you're just listening. 1.5% a year, big deal.
It's a life changer for
Right.
a lot of people.
Yeah.
Particularly people who are taking a lot of risk to get whatever return that they get. And I found it interesting because I would have guessed that the internationals didn't do as well as the U.S.
Because that's what we've heard since the Great Recession is don't be in internationals. If you're just in the U.S., you've done far better.
Well, small cap international value, 12.8% in the fund that I have in my own portfolio, and the emerging market value, again, a fund that I hold in my portfolio and recommend to others, 13.8.
Wait a minute. So the lousy companies in crummy countries like Brazil, Russia, India, China did better than the U.S.?
Well, let me define that. Lousy, okay. Out of favor.
Okay, out of favor.
I don't want to offend people.
I'm good. I'm better at that than you are, apparently. So,
But anyway, I think there's a lot to learn if we can look at the long term rather than look at what happened in the last year. And so DFA, Vanguard, two great passive managed portfolio people. I mean, they manage like indexes.
Yep.
They did better than did Warren Buffett for the last 15 years.
I think if you read Buffett's newsletter, he admits it's hard as Berkshire Hathaway has gotten so big.
Yes.
It's hard to keep coming up with the new idea, the new company that you can invest in that's going to beat the market, if you will.
Or make a difference in your portfolio, even if you get one when you're that big.
Indeed. 855-935-8255 is our telephone number. Paul Merriman joining us today. We're only here for an hour, so get your questions in. Then we're moving on to football. 855-935-TALK. We'll be right back.
Tom and Don are talking real money.
If you're looking for a nice short podcast to tide you over between episodes of Talking Real Money, check out Money 30. Money 30 podcasts are between 2 and 4 minutes long, and they're available at every major podcast service, including Apple Podcasts, or you can visit money30.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Welcome back. Tom Cock here. Don McDonald out this week. 855-935-8255 is our telephone number. 855-935-TALK. We're talking with Paul Merriman, who is still very active in his, can I say it?
What?
How old you are? Is it okay?
Yeah.
All right. In his 75th year. I mean, you're coming up on 75.
I am.
Born the same year as Jim Morrison. And boy, you've had a lot more lasting power, I got to say, than he
I don't
has,
look
so.
any better.
No, we don't know that for sure. So Paul's here to answer your questions about all things money. He's written several books. You've seen his. You had your online. You had your PBS special, which was absolutely Fitness After 50, right?
Financial fitness.
Yeah, it was
after
really
50.
really terrific. Which you probably still could find that somewhere, right?
Would you believe it? It's on my website.
There you go.
It's a surprise, but
which
it's
is
there.
just paulmerriman.com.
Yep.
With an I. So check all that stuff out. He does most of this absolutely free. You got portfolios up there from Schwab and Vanguard and Fidelity, and it's all. I think it's great. So I send people there all the time. So we're super glad to have you here. And Paul will be speaking at Retire Meet 2 weeks from today in Everett, which, by the way, just has a few tickets left. But you're also going to be speaking on Bainbridge Island soon, too, right?
26th of April.
Okay, that's coming up.
Think about this. You take the ferry over to Bainbridge.
Yeah.
You get there early so you can see this wonderful museum of art that we have. It's a great exhibition if you like that type of thing.
Yeah.
Then maybe you settle in for a little food someplace there. Great restaurants on Bainbridge.
Indeed, there are.
And then you watch me for 2 hours, try to educate you to get the most out of your 401k and your IRA. Then you catch the 8:20 ferry.
You got this all
back
figured
to
out.
Seattle,
Wow.
the lights of the city. Your
This guy's
big
selling it,
profits.
man.
You're just thinking how much money you're going to be making.
Okay, so tell us how they sign up, Paul. I mean, what else did you win?
Operators are waiting.
I guess they are.
No, you go to paulmerriman.com and
How much are the tickets? Got to ask.
Zero.
Oh, okay. All right. Because you were asking me how much Retire Meet was, and I never know. So I'm the worst guy in the world at that kind of thing. So, okay. paulmerriman.com. So that's next Thursday?
By the way, if I could charge him, I would do that, of course. But nobody's
Well,
ever.
but in all seriousness, you give away, I mean, anything you get paid for now, you're just giving away to charity anyway, right?
That's right.
Okay. So, paulmerriman.com, next Thursday on Bainbridge.
That's it.
Okay. I got it right. The art and the food are extra.
Art, food, and finance.
Art. Ooh, wow!
I like that.
You are really, really good. So, back to Warren Buffett for a moment, because it's blasphemy to say that just an index portfolio does better than Buffett. No,
No,
not. Okay. Well, tell me why.
Well, because learned people have looked at this carefully, and in fact, every 6 months, the Standard & Poor's people put out a report. It's called the SPIVA.
Yeah.
S-P-I-V is in Victory A. The SPIVA report that shows the returns of the benchmarks, the indexes.
Yeah, like the
and
S&P 500, the Russell 2, whatever it is.
yes,
Yeah, okay.
Right. So you're comparing apples to apples.
Yep.
And then they show you numbers, how many of those actively managed funds.
An active fund is where a manager's picking stocks or moving money around. A passive or index fund is just exposing your money to that particular asset, if you will.
And let's remember that the reason that active manager is in business is to beat the market. Otherwise, anybody could buy an index. It turns out that only about 10% of the actively managed funds are able to beat the benchmarks. So as an investor, you can see what happens to you. If you buy actively managed funds, The odds are against you, about 9-1. And if those are the odds, why wouldn't you pick the one that was in essence going to allow you to get the return that we might call par in golf?
I mean, part of it is settling. We can talk more about that. I mean, because when you own an index fund, you're settling. I'll just take what the market gives me. And a lot of people say, no, I want to be above average like I am as a driver and a lover. All these other... Anyway, we'll talk more about that. 855-935-8255 as we continue talking real money.
Tom and Don are talking real money.
Keeping the podcast breaks as painless as possible is my goal. That's why I want to very quickly tell you about the only magazine I've ever heard of that is 100% real investing all the time. There's no business news, no speculative advice, and certainly no lifestyle stuff. It's called Real Investing Journal. I publish it every quarter, and you can get 2 full years for only $25 at realinvestingjournal.com. That's realinvestingjournal.com.
Reality radio for a really great future. We're talking real money.
Welcome back to Talking Real Money, here to answer your questions about all things financial. 855-935-TALK. For those of you who are challenged with your phone like me, 855-935-8255. And yes, that is a toll-free number. We're honored to have financial educator, author, podcaster, speaker, and a successful businessman, all-around good guy, Paul Merriman, joining us here on Talking Real Money because Don is out of town. And you mentioned this study of funds. I found this fascinating to read this week. I mean, because most of us can remember 2003. It wasn't that long ago, right? I mean, I can even remember you and I were working together. We had another show called Sound Investing, which a few years later was picked as Best Money Podcast by Money Magazine. 2003, right? Okay, you own a mutual fund in 2003. How many of those funds still exist 15 years later?
That's amazing.
It's a fascinating number to me.
About half.
Less than half. 4 out of 10.
Yeah.
Where do they all go? What happens?
Bad performance. The people who run these families of mutual funds are smart enough to know that you're not going to be able to sell a fund if it's got bad performance. So you just merge it into another fund that you already have, and all of a sudden,
presto,
the bad return is gone, and the new fund's return is the one that is being posted for investors in terms of the long-term return. And
so if it doesn't work, it's the Taylor fund. And if it does work, then it's the Kelsey fund. I'll figure it out in my household. That was easy.
Well, and here's the part that's interesting. When you look at Morningstar returns over, like, let's say 15 years, it reflects...
Morningstar is kind of the Bible. I mean, the people keep track of all this
stuff. It's the best database.
You can type that in. And by the way, you can go to Morningstar.com and you can look up your fund.
It's free.
It's
all
a great
free.
service, yeah.
But here's what we know. They will show you the returns of the average mutual fund in a particular category. A
type, like a
small
S&P
cap
500.
value, big cap. That return does not reflect the loss of all of those mutual funds that were merged away.
I believe they call that survivor bias.
Survivorship bias.
Right, yeah,
That's
right. Survivorship bias. So 4 out of 10. I mean, it's fascinating to me. Now, the ones that we recommend, not that we're the smartest people. You are. I'm not. The smartest people in the world at Vanguard, at Dimensional Funds, I don't think any of those have ever gone away in this period of time, correct?
Not to my knowledge, but I will tell you, there's another thing that a lot of people overlook, and that is what the Spiva report talks about: consistency. Let's say you buy a fund because it's large cap value.
Yep.
How consistent over the 15-year period have they been? Have they continued to be large cap value, or have they drifted away? Most mutual funds are not consistent.
That's another reason, by the way, to own index funds. Because you know what you own today and tomorrow. And why would you want to buy something thinking it fits in this way in my portfolio and it doesn't the next day? Let's go back to the phones, 855-935-8255. And Carrie joins us here on Talking Real Money. Hi, Carrie.
Hi, how you doing?
We're doing well. How can we help you today?
Well, I'd like to know if you have an opinion regarding cryptocurrencies.
Yeah, you might not like my opinion, though. Do you want to go first, Paul, on this?
Well, I would imagine we have a similar opinion. because I would do a lot of work, Carrie, with young people, and young people are really interested in the idea of investing in cryptocurrencies. And I have fought them tooth and nail to try to keep them out of those because it is not an investment. And in
it
reality,
is a speculation.
Yes, it is
Clearly.
a speculation.
Yep.
And not only that, but if it's a currency, and if I accept it as a currency, as a business person, and I let you pay me in Bitcoin, and I, in essence, you buy something for $1,000, and I go to cash that in to help pay the bills of my company, and I find out it's only worth $500. What kind of a currency is that?
And here's a couple of numbers I pay attention. Trading, by the way, in Bitcoin is down 70% from the beginning of the year. And correct me if I'm wrong. I think the price was around $19,000. Today it's about $8,000. I mean, that's a pretty dramatic swing in any asset.
Isn't that the way it works? When things are high, people want it.
Yep.
When things go down, they don't want it.
We don't think it's an investment. It may have some value long term.
We'll find out.
We don't know.
We don't know.
I wouldn't be taking my money out and trading Bitcoin anytime soon. The last time I saw it was mentioned was on the TV show Billions, where he needs to secretly get his money, and he's going to get it that way. 855-935-8255. We'll be right back.
Tom and Don are talking real money.
If you need help allocating your retirement plan at work, you can get free help at 401-411.com. That's 401-411.com.
For your real life and real future, Tom and Don are talking real money.
Welcome back to Talking Real Money. 855-935-8255. 855-935-TALK. We're abbreviated today because, gosh darn it, that spring football game, you got to hear that live. Because there's some third-string guy walk-on from some... I'm mocking it a bit. But that's coming up in the 1 o'clock hour. So we're only here 1 hour. Our friend Paul Merriman, renowned author, financial educator, who's spoken to... all the AAIIs and CPAs you've held over the years, it's remarkable, truly is, who's here to answer questions too. So let's go back to the phones because, we can never get enough of cryptocurrencies. And Kerry would like to provide his side of the story when it comes to Bitcoin. Go ahead, Kerry.
Hi. Calling not necessarily regarding Bitcoin, but I don't know how much study you've put into the cryptocurrency space, but basically ICOs are a form of an IPO, except they're offered directly to the public initially. There's not an initial private placement, and then for the banks and exchanges, and then to the public at a increased rate. So most of the ICOs, though, are startup money for high-tech industry, and there are a lot of scams. A lot of those coins or currencies, whatever you want to call them, tokens, are gone.
Yeah, and something.
We're gonna limit this somewhat. And by the way, one reason I worry is the Escobar family, the notorious Escobar family, has their own cryptocurrency. But Paul, go ahead.
I really recommend, if people are on the fence about cryptocurrencies, that they watch John Oliver's video on this.
He went on about this. Yeah.
It's really good. And Kerry, you said it. A lot of them are scams, and you have to please be patient with Tom. Please be patient with me, because every word that comes out of our mouth is supposed to be serious about helping people for the long term do the things that have the highest probability of helping them reach that goal. And cryptocurrencies I cannot include them in the list of investments that I would recommend to people I really want to help.
There's commodities have been something you hear, trade commodities. Well, I don't know anybody who's done it long term and made more, again, than just owning wide diversified portfolio of stocks.
Well, it's worse than that, though, Tom, is that most people who try to trade commodities lose. And I think it's less than 5% end up making money trading commodities. You stay at the table long enough, you keep playing, they're likely to take your money.
Well, and this brings me to a great topic. I don't want to spend much time on cryptocurrencies because, frankly, I would not be investing in them. If you called me and asked me, I would not recommend them. But how many people, my son's here who's 20-something, how many people really need a financial advisor? And you use one, right?
I do.
And you're a pretty smart guy. How many people listening today even need a financial advisor or plan or whatever?
Well, at points along the way, everybody does. I mean, when you look at the Social Security information about decisions people make around Social Security, just if they'd spend a half an hour with an advisor, it would change their lives, I think, in a lot of cases. Coming to retirement, how much should you have in equities and how much in fixed income? What if you're sitting on a bunch of investments that are just lousy investments? Wouldn't it be nice if you could find somebody objectively to tell you, look, you're going to hold those for the next 30 years in retirement and see those likely go down while you're trying to take money out?
Finance.
That's counterproductive. Doesn't mean you have to hire them for life, but having somebody look at a portfolio is golden.
Give you by the way, even if you have somebody else who's doing this, getting a second opinion sometimes.
Yeah.
Right, because we know there's a very small part of this industry that has a legal requirement to put your interests ahead of their own.
In fact, most people actually don't put you're right. Most people do not consider you first. And Wall Street, those firms, and they're legitimate firms, just like any corporation, but they have to put the profitability of their firm above everything else they do.
Now, they don't ever advertise that. I never see the big fancy ad during the Super Bowl that says, "Hi, we're putting our interests first. If anything's left, we'll pass it on to you."
Well, unfortunately, that's the way a lot of life is, though, Tom, is that,
everybody has an interest in getting you to spend,
even doctors, even attorneys, if you dig
okay.
deep enough, you find that a lot of folks are compromised. And what I want from a physician, from a CPA, an advisor, is somebody who is competent and ethical and cares. That's what I want.
You mentioned social. We're talking with Paul Merriman, by the way. You still have time to get a quick call in here before the top of the hour, 855-935-TALK. If you can't make it now, we're going to be on KVI just down the dial here at 2 o'clock, so join us for that. You mentioned Social Security. I am still absolutely flabbergasted, blown away, when I read that it's only 2% of men wait till age 70 to take it, not realizing that that's 132% of what they would have gotten at 62, correct? I mean, it's 8% a year all those years. No, that's at full retirement age.
Yes.
So, I mean, it's crazy.
And I think what a lot of that is about is they can't afford to retire without that money. I read a number years ago, but I suspect it may still be true, that 30% of retirees are taking out 7% or more annually from their investments.
How much do you recommend?
No more than 5.
Okay.
Under unusual circumstances, 6, but you got to have a lot of money.
But maybe you waited until 70 to take that out.
That's correct.
If you wait till 70, you have fewer years. Obviously, you can take more out as a percentage.
Well, I waited. My wife waited. And I hope you wait.
I'm planning on working till 70, but, it gets back to this whole thing. You don't know.
You don't have to work to 70. You have to not take Social Security till 70.
I won't take Social Security till 70. I mean, the question will be, and for those of you who don't know, I just turned 60 recently, whether or not I can work. My plan would be to work full-time till 70.
I hope you do.
Yeah, I know you did. Well, you're still working.
Well,
you're just not. You're giving away the money. But I mean, because I would go insane. That's number one. Plus, I like my work, and it's not physically demanding. I got the young guys to carry around the mutual funds. They do the heavy lifting.
I see. Okay.
I got the easy job. I just talk to people. It's fun.
You educate.
Yeah, I mean, I just talked to a guy in California today who's got a crummy 401k. He works in construction, makes a lot of money. He's in his mid-20s. What do I do? Well, here, go do this with a Roth IRA. I mean, I love that kind of thing. So my goal would be to work till 70, take Social Security then, not tap anything I've saved until 70, and then your window is what I was trying to say. It's relatively short. I'm hoping to live till 90 because my grandson would be 30. That would be fun for me. But
by the way,
who knows?
I have to, you mentioned 401k,
Yeah.
so that's an opener for me. Thank
Go ahead,
you.
quickly, yeah.
Your firm has been helping my foundation do the analysis of 401ks across America. I think we're up to 130.
You can go see those at paulmerriman.com. Where do they click when they get to that page?
401k.
Tough to figure out. So your company plan may be there. The point is we show you how to use the mutual funds that are in that plan. paulmerriman.com. Click on 401k. We'll be right back with more here on Talking Real Money in just a moment.
Tom and Don are talking real money.
We mention 855-935-TALK, 855-935-8255 throughout the podcast. But you need to know that you can call that number 24 hours a day, 7 days a week. Leave your question, and those will be answered in special Talking Real Money podcasts that will appear on this particular site in the future. So give us a call, 855-935-TALK, 855-935-8255.
Your guides to a really great financial future. Tom and Don are talking real money.
Learn how to get your retirement right at RetireMeet coming up just a few weeks away in Everett. Learn more at retiremeet.com. That's retiremeet.com. Hear from great people like Paul Merriman, Herb Weisbaum, myself, and Don. retiremeet.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?